Your wealth deserves stability, expertise, security. Your wealth deserves LGT Cresto, private wealth with over a century of global heritage.
Hello and welcome to the Global View on this Friday. Well, China's central bank has said it would keep liquidity reasonably ample and maintain precise and forceful policy to support economic recovery against headwinds. This comes amid more signs of trouble in the country's property sector. Evergrande, the heavily indebted property developer, has filed for protection from creditors with the US bankruptcy court in Manhattan. The filing under Chapter 15 of the US Bankruptcy Code came after China's Evergrande delayed its meetings for the Hong Kong holders of debt to provide more time to consider a fresh restructuring plan. Trading in China Evergrande shares was suspended on March 21st last year. Well, investors are keeping a close eye on the impacts of multinationals operating in China, with recent earnings calls from industrial players with exposure there flagging increasing headwinds. This is front of mind for Brad Gastwirth from Unearthing Opportunities, who I caught up with earlier.
A little bit of a seesaw battle. Right now, obviously, we've had a few days of red, and a lot of people are looking for the downside here in the near term. I think it's going to be, quite volatile. It's no surprise, and that's not really a change of view. I do think that you're still seeing more money coming into the markets. So it'll be interesting to see if we do indeed break down, either from a technical perspective, or if we just sit down and we get more negative news, either from macro and some of the U.S.-centric companies. But right now, you're still having more of a positive bias with money flow coming in, and then also AI-related benefits happening. I know all the negatives. I understand all the negatives. Inflation is terrible. Rates are increasing. But we have to see real breakdowns before we can actually turn very bearish, and that'll be the real seesaw. If we do break down, there will be a lot more to go down. If we actually hold up, then I don't think we're going to retest it again.
All right, and Brad, of course, I mentioned what's going on in China at the moment. More and more weak data we're seeing out of the country. What's the likely impact, I guess, particularly for those US companies who are exposed there?
Yeah, and I mean, this is such an important question, and something that, I focus on global, and I've been going to that region probably 50 times in the last several years. And, the economy is slowing down, and it's quite dramatic. And what it's doing to the tech side on handsets and across the board, I mean, it's going to have a major impact. And the question is, though, is how much is the government pumping money back into the economy, which they are, and then how much is that going to offset, the housing decline we're seeing in that region, what's happening already with employment, because you're seeing so many more robotic-centric companies and stores that are replacing that middle income worker. So I think there's more negative trends. Clearly that government can sort of do what they want to do to boost, and we'll see what they do with on the monetary side. But it's certainly something we're paying close attention to. I don't think we're out of the woods anytime soon from a growth perspective or a change of direction in that region.
Which companies in particular are you keeping an eye on? I know that, given the headwinds you're seeing out of China at the moment, such as, well, you mentioned Tyson Foods, Caterpillar, DuPont, some of those industrials. What are you watching for?
Yeah, I mean, so we're basically looking to see, what the commentary is out of the region. And, I spent a lot of my time on the tech side looking at, capacity expansion plans, looking at components and different manufacturers, and seeing, what's happening in the region with, the largest component that goes into units is on the handset side. Handsets are the largest unit in the world. And if you start tracking and what's going on in Chinese handsets over the last several years, we're at almost a low in the last probably 6 years on the Chinese handset side, which is a pretty good staple of how that economy is doing and how it translates into the U.S. I mean, there's companies that still have significant exposure. So you mentioned it, you're spot on. I mean, Tyson Foods had that big news out that they're likely selling their Chinese plant. You've had a lot of industrial companies talk about some weakness in that region, and I think that's going to continue. I think when investors look to purchase stocks, especially if they're looking at U.S. companies, they have to really sort of see what percentage of exposure do they have to China, and then they have to discount that to the risk of that stock. So when we're looking at companies, and we'd rather have a lot less exposure to that region, because I think it's a wild card. There's more likely that we wake up overnight and wake up from an overnight negative news than a positive one. I don't see that much upside risk being that coming from that region. I think there's more downside surprises or downside risk of news flow that could come overnight when we wake up in the morning here in the U.S. So I like to look for companies that have less exposure. If I look at large cap tech, the one with one of the most is Apple. So that's one, I think, on the higher risk point from large cap tech. But I think if you look at Google, you really have minimal exposure there. Amazon, you're having less exposure. And I think you're looking at Nvidia that had a lot of exposure. They already talked about it, but other regions are offsetting it there on that front.
Brad, I also note that you're seeing, taking a close look at what's going on in the EV market at the moment, particularly with those valuations, and I guess also that China comes into that equation at the same time.
Yeah, BYD's, they've done incredibly well in the region and in your side of the world. BYD's certainly has a very good offering. Tesla, the valuation hasn't made sense for some time. You can't relate this to just an automobile company given the valuation it has. They are purely a tech company. They have probably the largest supercomputer, and they're going to do many different things in the future than just automobiles. So that's the reason why that valuation is so strong. But if you look at the FinFast, the company that just made its debut on NASDAQ, it's a Vietnamese EV maker, it got valued on day one more than Ford, General Motors, BMW, Volkswagen. And that's just, to me, ridiculous for a company that only produced 11,000 vehicles compared to the likes of a GM or Ford that's in the millions. So you're getting a valuation more than some established companies with a company only doing 11,000 in production. If you can borrow that stock, you want to short it because those numbers just do not make sense.
All right, so you're not seeing any value whatsoever in that sector, even among the established car makers at this point?
I'm not a buyer right now in autos. I think there's more risk in automobiles and automobile related stocks. I like Tesla from a technology perspective. I don't like it at this current valuation. So I'm really more away from that sector currently. I think when we move to autonomous vehicles, which we're not that far away from, there's more risk to that whole sector. And even you peel that onion back more, the derivatives of that, the automobile parts companies like Advanced Auto Parts, AutoZone, I see a lot of risk to those, and then even the dealerships like in AutoNation, I think there's significant risk too. So I think in the long term, I want to avoid the sector. In the medium term, definitely. In the near term, maybe there'll be some trading opportunities, but I stay away from it right now. It's not really something I'm looking into investing.
Brad, I also note, and you've spoken about this before, that you continue to like precious metals. Why is that? And I guess you take a look at what's going on, particularly with those bond yields at the moment.
Yeah, it's such an easy hedge against currency, and I think when you look at what's going on globally with inflation, it's probably the easiest bet to make. And even when the market was rallying, the gold price, the precious metals still weren't really coming off. So that says something in itself. I think that this sector will continue to do well for some time. I think it's something that every investor, if they want to be really diversified, should actually have exposure in. And I wouldn't be surprised if more portfolios are getting a little bit more overweight in precious metals, just given the macro uncertainty.
Yet most recently, we have seen the gold pressure in particular, the gold price, I should say, under pressure recently. But yeah. Are you expecting a breakout? Are you?
Yeah, the trend is still higher, right? So we're still, nothing goes completely linearly. You're going to have fluctuations, but that trend is still much higher. And I don't see that trend breaking for a number of years.
All right, so is this a matter of investing directly in gold, like an ETF, or are you actually also into those producers as well?
I mean, if you can buy the gold itself and be able to store it, and then you have a storage cost related to it, that's the best personal way. I mean, that's the best way to invest in that commodity. But there's a lot of different ways for investors, depending on where they are in the region. If they're a global investor or if they're an investor over here, you certainly can go on the ETF side. You can certainly find other vehicles, but ETF's a fine way to have exposure. I mean, obviously the pure investment is the best, but there's certainly investors are limited depending on the type of investor and the access they have.
Gastwirth from Unearthing Opportunities out of the States. All right, that is the global view for this Friday. We're just a few minutes away from the open locally, where we are expecting to extend those losses we have seen over the past 2 or 3 sessions. SPY futures off around 1/3%. We did see the US market take another leg lower on concerns about rates being higher for longer. We've seen those bond yields, particularly at the longer end, continue to move higher. And then, of course, as we've just been talking about, those issues that are in China at the moment with growing global concern about where that economy is tracking. Stay with us. The Open, just moments away.